podcast is brought to you by DABA, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the DABA app on your favorite Google and Apple app stores. Let's start with good news to open the year. The BRVM enters 2026 on a strong and reassuring note, fully in line with the exceptional momentum built throughout 2025. The week from Monday, December 29 to Friday, January 7th, delivered a clear message to investors. The West African market remains dynamic, well-structured, and supported by solid flows across both equities and bonds. Let's begin with the big picture. All major regional stock market indices closed the week higher, confirming renewed confidence at the very start of the year. The BRVM Composite Index advanced to around 344 points, reflecting a weekly increase of just over 1%. The BRVM 30 Index, which tracks the most liquid and closely followed stocks, also moved higher, showing that large capitalization companies remain at the heart of investor strategies. Finally, the BRVM Prestige Index, which represents companies with the strongest governance standards, delivered the best relative performance of the week, rising by nearly 2%. What does this mean for you as an investor? A simultaneous rise across these three indices tells us something important. The market's strength is not limited to a handful of speculative stocks. It is broad, balanced, and supported by fundamentals. This reflects a market environment where risk-taking is measured but confident, especially as investors position themselves for the new year. Trading activity also picked up meaningfully. Volumes increased sharply compared with the previous week, with more than 2 million shares traded across the market. The total value of transactions reached several billion CFA francs, marking a noticeable improvement. This rise in activity is a positive signal. It shows that investors are not sitting on the sidelines. They are adjusting portfolios, reallocating capital, and actively preparing their strategies for the months ahead. Turning to equities, the week was characterized by a slight dominance of rising stocks over declining ones. Just over 20 stocks closed higher, while just over 20 ended lower. This near balance highlights a selective market, where each company is assessed on its own fundamentals rather than being carried blindly by the overall trend. Among the top gainers of the week, an industrial and packaging stock stood out, rising by more than 7%. This performance comes in a very specific context. The stock had previously faced regulatory sanctions and was temporarily suspended. Its readmission to the market has gradually restored investor confidence. This type of move reminds us of a key stock market lesson. Corrections driven by regulatory or technical events can, over time, create recovery opportunities once visibility improves. Another strong performer came from the publishing and media sector, posting a weekly gain of over 6%. This confirms renewed interest in sectors that are sometimes overlooked. The message from the BRVM is clear. Investors are no longer focused solely on banks or telecommunications. They are seeking growth, resilience, and business models capable of navigating economic cycles. The energy sector also played its part. A well-known fuel distribution company ranked among the week's top performers, rising by more than 6%. For investors, this reflects continued appetite for companies exposed to domestic consumption and essential infrastructure, particularly in a region where underlying demand remains strong. On the other side of the market, a few stocks took a breather. The stock with the steepest decline fell by just over 10% during the week. Importantly, this correction followed a period of strong price appreciation, driven by improved operational profitability. For investors, this is an important reminder. A price decline does not always signal structural weakness. In many cases, it simply reflects profit-taking after a strong rally. Two other stocks also recorded declines of around 5 to 6%. Once again, these moves appear to be adjustments, rather than signs of a broader trend reversal. In a rising but selective market, such movements are normal and even healthy. They allow prices to realign with fundamentals. Let's now turn to bonds, a segment that often receives less attention but plays a critical role in portfolio construction. Over the week, bond market capitalization edged slightly higher. At the same time, trading activity declined modestly, reflecting a more cautious stance among investors at the transition between two calendar years. The bulk of trading activity was concentrated in a long-dated sovereign bond, a 10-year government bond offering an attractive yield. More than half of the total value traded in the bond market came from this single instrument. This behavior is highly informative. Investors continue to prioritize safety, visibility, and medium to long maturities, especially when they offer regular coupons and sufficient liquidity. In practical terms, this means bonds remain a cornerstone of portfolio stability. In an environment where equities are rising but increasingly selective, bonds help smooth volatility and provide predictable income in CFA francs. Several corporate and regional institutional bonds, with maturities ranging from 8-year to 10-year, continue to offer attractive yields to maturity. These yields are particularly appealing as some bonds still trade below face value, offering additional upside at maturity. Before looking ahead, it is worth stepping back and placing this week in a broader context. The year 2025 was a historic one for the BRVM. The BRVM Composite Index gained more than 25% over the year, and more than 40% in US dollar terms. Very few markets globally delivered comparable performance over the same period. Beyond the headline numbers, 2025 rewarded discipline and selectivity above all else. Some stocks delivered triple-digit price increases, while other large capitalizations finished the year in negative territory. This reinforces a fundamental truth of the BRVM. Returns do not come automatically from the index. They come from choosing the right companies at the right time, with a long-term mindset. Consumer staples and discretionary consumption were among the strongest sectors in 2025, supported by resilient domestic demand. Financial services and industrial stocks also posted solid gains, while telecommunications underperformed overall. For investors, this underscores the importance of thoughtful sector diversification. So, what should investors expect in the week ahead as January gets underway? The data suggests a market entering 2026 on solid footing. Volumes are recovering, confidence is present, and opportunities remain abundant. However, selectivity will be more important than ever. Not all stocks offer the same potential, and not all bonds provide the same risk-return profile. The coming sessions will be particularly interesting for identifying opportunities among undervalued companies, businesses with strong earnings visibility, and bonds offering attractive yields relative to their maturity. These opportunities exist, they are real, but they require analysis, patience, and a clear understanding of market dynamics. This is exactly where DABA Pro becomes essential. With in-depth analysis, disciplined stock selection, and weekly recommendations, DABA Pro helps transform market information into concrete investment decisions aligned with your objectives. To receive weekly recommendations, access exclusive research, and invest with greater confidence across the BRVM and African assets, subscribe to DABA Pro. With DABA Pro, you do not simply follow the market, you stay ahead of it. That's all for today's episode. Thanks for listening to the DABA Markets Talk podcast. We'll be back next week with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the DABA app on your app store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.